Welcome to Block Time. So I want to talk a little bit about the recent trends in the price of crypto. Everyone's aware that we've seen a big decrease in the overall market cap and value of some of the major cryptocurrencies. But I want to do a little bit of analysis as to why that is and dig a little bit behind the scenes. And actually what we see is that it's not as bad as it looks. Now, on the base of it, there's two factors that people typically use to track the value of crypto. The Bitcoin price, Bitcoin obviously being the largest major cryptocurrency, and we've seen the Bitcoin price go as high as almost $20,000 and has come back down to where it is today at around $7,000 to $8,000. Now, firstly, we've got to bear in mind that if we look back a year, Bitcoin was at $6,000, so it's still an increase on that, but we have seen it decrease in over half of its value. The other indicator that people look at is the overall market cap of cryptocurrencies, which went to several $100 billion and again has decreased. And that's why I want to talk about more, because it actually gives us some insight into why we've seen a depreciation in the value of a lot of the cryptocurrencies. So the first thing I want to talk about is why the decrease in value, and really there's quite a simple explanation there. If we look at the last year, we've seen a huge increase in the number of ICOs and companies raising money for ICOs. Now, if we think of how an ICO works, companies are issuing tokens, and those tokens are typically purchased using Bitcoin or Ethereum. And so these companies have raised millions, if not hundreds of millions of dollars for these ICOs, but in the real world, they need to be able to pay developers, pay for marketing, pay for services, and those services need to be paid in real dollars. So firstly, we've seen a lot of companies that have raised money through ICOs selling off portions of their Bitcoin and Ethereum in order to support their development. And at the same time, there's companies that have raised a lot of money that are now seeing a decrease in the overall value. They want to hedge against that. So it's only natural that we will see a lot of selling after a period where we've seen a lot of companies raise money for ICOs. Now, the way that I read into that, and if we look at the overall market cap, now the market cap of crypto only reflects the market cap of value that's stored in the cryptocurrency itself. It doesn't reflect the overall blockchain and crypto ecosystem. Think of it this way: if a company has raised, let's say, $100 million via an ICO, and $100 million is stored in Bitcoin and Ethereum, now they're selling off a portion of that crypto in order to support their development. That money hasn't actually left the ecosystem. It's still there. It's just now being stored in a fiat amount and then being converted into development hours and development effort. So when we look at that overall value of the cryptocurrency market, it's a little bit misrepresentative at the moment because it doesn't factor in any of the ongoing development work that these ICOs have raised money for. So another way to think of it is, well, what is the overall market cap of crypto when we include the current market cap of all of the coins plus the money that's currently locked up in development of some of these platforms? And bear in mind that these platforms will take a while, certainly a minimum a year, before they reach fruition. So when I look at the space, I think that a lot of that depreciation we've seen is just movement of that store of value from cryptocurrency to more traditional, fiat, essentially dollars, that these companies are now using to develop these platforms that they've raised money for. Now that means that we're going to see this continuing trend for, I think, certainly the next few months, probably the remainder of this year, while these platforms develop their technology in order to launch it. So that value hasn't actually gone away, it's just now locked up in those development life cycles. So what does that mean for crypto? Well, in a sense it's good. It means that there's a lot of ongoing work developing these platforms for these various token-based economies. In some of my previous videos I talked about the readiness of token economy. We're not there yet. It's going to take time for that consumer adoption, for people to get comfortable using tokens. So right now we're really in a period of fast development for the blockchain and crypto ecosystem. And that's really not a bad thing. In fact, it's a very good thing. We're seeing a correction, a settlement in the price, but we're also seeing a lot of that money that's been raised now being put to good use actually building these platforms. Another thing that is interesting about this current trend is cryptocurrencies have gone through these very, very big swings over the years. It's not something new, but there's been a lot more attention to this last big swing. And the reason for that is the correlation with public markets and large institutional investors. This is the first time in the last 12 months that we've seen large traditional investors start to get into the space. It's the first time where we've seen large crypto and blockchain companies on the public markets in any significant way. And when we look at the trends in the crypto space, going up and down 50% is not something new. It's something that we've seen over the years. We've seen these big swings and corrections. But to the public markets, that's something quite scary, and that's something that's considered very, very volatile. And so once again, a lot of the reaction to these latest price swings have been emphasized because we're seeing correlation of that in the public markets. If this was pure crypto, there wouldn't be as much focus on it, but because we're seeing public companies trade alongside these large swings in cryptocurrencies, there's a lot more attention and focus behind it. And again, that's a good thing. It means that people are becoming more aware of the cryptocurrency space. It means that cryptocurrencies are starting to become more mainstream to trade alongside the public markets. But this transition period is quite scary for those traditional institutional investors who would consider this very volatile and would consider a 10–15% increase or decrease as a large swing. In crypto, we're very used to that. So in summary, there are these two factors at play. One, these companies that have raised money through ICOs need to now build their technology. We need to allow them to build their technology. They're not all going to succeed, but that crypto that they're selling for dollars to pay for development is still in that ecosystem, is still in the crypto and blockchain ecosystem. And also the large reaction we've seen to the crypto space is because there's much more awareness of it, and we're seeing it mirrored in the public markets, where these swings would traditionally be seen as very, very volatile and over the top. This is just a natural progression of crypto as it becomes more mainstream. And while I think we're going to continue to see this lull for the remainder of this year, it's a sign of that growing adoption of crypto and blockchain. Thanks for listening to Block Time.